Let's see if that works. There we go.
Oh.
Are those words backwards for you? Because when I'm looking at them, they're backwards.
No, they're. I see them right.
Okay, cool. And then, yep, screen share, and I'll be able to do that. That's cool. So who do we got? Who's all on? Who's here? Man, I'm excited.
Yeah, definitely. So we have some of our newer agents here. We have Paul King. Paul, do you want to say hi, or I'll kind of let you guys introduce yourself? Paul. Paul.
Hi. Hey, Bill. My name's Paul. New, still taking classes right now, but I appreciate you, running through some of the stuff that we'll be going over today. So thanks, man.
Awesome. Yeah, looking forward to it, Paul. We're going to share some of the very basics. Not going to get too granular on some of this stuff. I just want you guys to have a feel for how it'll work when you refer clients to us and what we do. So looking forward to it. When do you actually take your test?
I'm only about halfway through, so I probably got still another 60, 70 hours left.
Okay.
Probably another couple months if I had to guess before I get everything done.
Cool. Well, it's a great idea to have this kind of training up front because then you can hit the ground running once you get your license. And that's great. Nice to meet you.
That's the plan. Yep. Thanks,
awesome.
Man.
Who else we got on?
Megan, do you want to go?
Hi.
Yeah.
It's Megan. I am taking my exam next week, so I'm really excited to be part of the Golden Group team and also to be getting a leg up on meeting with you and hearing what you have to say.
Awesome. Well, welcome. Welcome, Megan. So you're not on video yet?
Oh, no, I'm on video.
Oh, I don't see you.
Yeah, we don't see you.
Oh.
I know the fun world of.
Can you see us?
Oh, there you are. Other way.
I don't see anybody.
Yeah, I don't see you.
Am I not coming through?
Yeah,
No,
I got you, Paul. Yeah, I see you. I got Paul, I got Eddie. And Megan's going like zooming in and out.
Yeah. Jamie, do you want to go?
And then, hi, Bill. My name's Jamie Kostelnik. I just passed my real estate exam a couple of days ago. So
Congratulations.
Thank you so much.
Wow, that's awesome.
And I'm driving right now home from an open house. So I will be at a computer and live with a video camera here shortly when I'm not in danger.
Very
Making
cool.
that happen. So
very cool. Kostelnik, is that an Avon Lake family?
Yes.
I went to school with, I think, a Kathy Kostelnik. Wonder if that's her aunt.
I'm sorry, I'm having some network connection problems right now. What was that you just said?
I was wondering if Kostelnik was an Avon Lake family because I went to school with I think it was a Kathy Kostelnik.
Yes, it's an Avon Lake family. Yes, my husband is from there, and my mother-in-law and father-in-law met there too. Dan Kostelnik, Jeannie Kostelnik, and
cool.
Kathy. I think that's my father-in-law's cousin.
I think it was Kathy or Karen Kostelnik. Yeah. Avon Lake High School, graduated like in 1980 or something like that. So long time, way before your guys' times. Cool. So congratulations on passing your test. And Megan, you're taking yours next week, you said?
Yes, on Wednesday. Cool. Very excited, very nervous.
Very cool. You guys will do fine, I'm sure. Sure.
Can you guys see yet?
Yep.
I can see you, Megan. Yes. Yeah. Are we having Robbie, Maria, and Shannon?
Robbie's writing an offer right now with someone. So Maria, I just texted her to see if she's going to make it on, and Shannon had something pop up. Shannon isn't really an agent yet, so she does more of like our recruiting and helping agents get started, you know. So, but yeah, so I think we're probably safe to get started.
Okay, cool.
Oh, Robbie,
well, we can do that. We can do that. And Eddie, you want me to just go and go around, just take off and do this?
Yeah. Yeah. Do you just want to kind of introduce yourself and kind of?
Yeah, I'll do that. So
hi,
guys,
Robbie. We can't hear you, but Robbie just popped on.
Robbie's on.
Yeah.
What's up?
There he is. Hey, what's up?
Hey, Robbie, how you
Hey,
doing?
how's it going?
Good. You're writing an offer?
Yeah, so I might have to leave early, but
You might need a pre-approval certificate. Let me know.
Yeah.
yeah, sounds
There you
good.
go.
I already have one, but I'll let you know for the next time.
That's cool. So, Robbie, how long you been an agent?
Since June?
Awesome. So, is this one of your first deals?
No, this would be the second if it goes through.
Good for you. Good for
Yeah.
you.
Thank you.
Fantastic. So, well, guys, welcome. It's a Sunday, and it's kind of funny because some people don't understand about working on Sundays, right? But in our world, it's game day, right? It's absolutely game day, and so it's a little bit of a mind shift compared to society. But working on a Sunday is what we're about, and so whenever realtors call me and they go, "Hey, I hate to bother you on a Sunday," I'm like, "Are you kidding me? This is what I'm here for." Right? My job is to make you guys look good. And so, little introduction of myself. Again, Bill Dicapua with Union Home Mortgage. 27 years in the business. I'm probably in the business as long as most, looks like you guys might have been alive. So, but 27 years. I've been with Union Home for about 17 years. Union Home Mortgage is a national mortgage banker. And what that means is we do nothing but home loans. And we are actually a mortgage bank where we close the loan in our name and you make your payments to Union Home Mortgage. Okay. So it's a little bit different than some other places out there. You may have heard of us before. If you haven't, I'm sure you will now that you've heard the name. If you watch the Cleveland Indians at all, I know you've seen us because we are massive sponsors there. Union Home is a national lender. We're in 44 states. Our corporate national headquarters is actually in Strongsville. And we've got this crazy campus in Strongsville that we've been building, just like 4 different buildings, and it houses, a couple thousand people. I mean, it's crazy. So we've just built this, great presence here in Northeastern Ohio, and we're taking it national. So again, I started off in the industry as an in-house lender for Realty One. You guys probably don't know who Realty One was, but that was a real estate company before Howard Hanna. And so I was the in-house lender for a while. Then I started my own company, and then I came on board with Union Home 17 years ago. And it's been a great decision in my career. It's just been one of those things that I made the move and I knew I came to the last place I'll ever work, which is really cool. It's good to have that feeling knowing, that you're at the right spot. And that's how I can, assuredly say that. So, we're a partner. My job is to make you guys look good. And when you can call and refer a client to me or dial the phone and I pick up, it's impressive for your clients to see that you've got a mortgage banker on speed dial, basically. And so I'm going to encourage all of you guys. I'd like all of your phone numbers. I'll put it in my phone. And then that way we can always be there for you when you need us, really kind of at a moment's notice. One of the things a couple of things I want to go through today, but one of the main things is what happens when you refer a client to me. Okay. I want you to understand the dynamics of it. Okay. So I'm going to show you some screen shares here in a little bit. I have 4 full-time assistants that work for me. And the reason I have that is I want to make sure we're catering to your buyer's needs. We want to make sure that you guys are getting taken care of. The buyers are calling, somebody's answering the phone. We don't like it to go to voicemail. We like to always be updating everybody on the status of the loan as we go. You're going to find when you're not working with us, one of your biggest concerns or complaints about other lenders. Eddie, what would you say it is? Biggest complaint about other lenders?
Follow up.
Follow up. No
Yeah.
communications, right?
Yeah.
You always wonder what's going on the deal. One of the things that we actually pride ourselves on, and we do a survey after every one of our transactions, and people compliment us on our follow-up and our communications. It's just so important because again, our job is to make you look good. And when your buyers are asking you a question, you can check the most recent status update. Or if your seller is asking a question, hey, has that appraisal been in yet? As soon as anything happens on your transaction, you start receiving emails with videos telling about the different milestones that we've moved to. Eddie, you like that at all?
It's awesome. Like, honestly, like I can totally speak to Bill on that, where his team follows up better than any other team, anyone in lending, honestly. And that part of the follow-up that he's talking about is awesome. Like, it's automatic, and it kind of just gives your buyer and your clients like that. And you really, I mean, you see it too, where it's like, oh, it just got moved to underwriting. Oh, the appraisal's in. Oh, they need this, or oh, like their follow-up is terrific.
Yeah, and that just makes you guys look that much better as the professional as you're conveying that information to your buyer, to your seller. It's just a great way to be. Our company has literally been set up with the loan officer looking good to the realtor. We do everything to make us shine for you because, again, we're a partner and we make it happen together. So one of the best ways to refer somebody to me, and Eddie, you can speak on your mode and what you're training and things like that. But one of the best ways is to ask if it's okay for me to give them a call. Because if you give me their name and number, 100% of the time, I'm going to call them, right? Sometimes when you say, hey, why don't you give Bill a call? Here's his number. It doesn't always work out. And then you might be like, keep asking him, hey, did you call Bill? Did you call Bill? So Eddie, would you agree that one of the best ways is to just proactively do that?
100%. Or start a group conversation with your client and Bill and say, hey, this is Bill. He's like a great lender. If you need anything, something along those lines.
Love it. Yeah, love it. On a joint text, we do that often. Yes, that's a great way to be. So once you've introduced your client to me and we've made the connection, usually we're going to reach out to them, and I basically take them through the process of, and it's really important in sales, and you guys are going to learn this. You want to meet people where they're at, right? I don't want to just go blasting through, assume. I want to start to kind of, get a feel for their demeanor and how, and you can relate to this if you think about, like, if the phone rings and it's some guy that's bullet points, right? He's an attorney and he just went boom, boom, boom. I want this house. I want this, and this. You get the feel for how to talk to this guy and how to present. But then if you have a little old lady that calls in and she wants to talk about listing her home that she's lived in for 67 years, and she's a little more warm and feely, you guys have to get to that level as quick as you can, because that's how you're going to improve your sales skills. Okay. I've got the exact same thing to do on the phone when I'm talking to one of your buyers. I literally have 2 to 3 seconds to try to figure out where they're at based on the first 1 or 2 sentences they say. And so what I do is I meet people where they're at, but I literally tell them this, and my team does it. My son's on my team. My son's listened to this for 25 years. And so he sounds like a recording of me, but we go through the process of asking your clients, first of all, we thank them for the opportunity to talk to them. We always give honor, and whoever referred them. For instance, Paul, if you refer one of your clients to me, my job's to make you to look good, and I'm not going to let them know you guys are new agents. I just won't do it. I won't say, hey, you're lucky you're the very first guy he's ever had. I mean, I'm not going to do that, okay? We've worked together before because it's Sunday right now and we're working together. So as far as I'm concerned, we've worked together. And so I Mr. and Mrs. Smith say, yep, Paul King gave me your name and number, wanted me to give you a call. And if I'm on the other line, my team answers that call and they will start to gather some information because I'm on the phone. We don't want that, we don't want to play phone tag. So we'll start that process. We kind of run our office here like a doctor's office. When you're sick, and you call the doctor doesn't always answer the phone, right? Most of the time he doesn't, but he's got people that answer the phone and they help and they start to move you through the process. Well, once I start talking to them, I will tell them, what we do is we need to ask you some questions about your income and your debt. And I'm going to go up and make an illustration on the board and kind of show you how I dance that dance with them. Because again, you want to meet people where they're at. Some people are very guarded and they don't want to just share all the information right away. And, and I've had to train my assistants that when we go through this process, realizing that your buyers are financially undressing with us, right? Because they're telling us everything. They're telling us their income. They're telling us their debts. They're telling us about their bankruptcy, their foreclosure, their divorce, their child support, their tax liens, their collections, their credit score. So it's very, it's very intimate from that standpoint. So we have to handle that very sensitively. And I'm very cognizant of that. So it's just kind of a dance that we do. The other thing is I'm sitting in my conference room right now, and normally I love to meet with clients. So I'm always forever wanting to get that initial, consultation in. If you've got first-time buyers, they absolutely love it. We educate the heck out of them, and it's great to see the light bulbs going off as they are understanding what's happening. If we have move-up buyers, we still like to do a consultation, but we're not meeting with people right now because of COVID. So we literally are doing these web conferences, and I'm doing consultations right here on the whiteboard behind me, just like they were sitting across from me at the same conference table. So it's just one of those things that we've adapted accordingly. But I just want to go through a couple of things. We're gonna talk about how to pre-qualify somebody. We're gonna talk about some of the different loan products, the pros and cons, and try, I have to drive and weave down the lane to figure out which ones might be best suited for the buyers based on their circumstances. We're gonna talk a little bit about coaching and things that you guys can do as far as day-to-day, week-to-week, and of course you're on a great team. Eddie's going to teach you a lot of that stuff. Keller Williams has got some great training as well, and then we're just going to open it up for questions. So I don't want this to be super formal. I'd rather you guys kind of interact. If you have questions, stop me. Eddie, I know when to prompt me and do something and bring something up, so please feel free to do that. Okay.
Hey,
So
Bill, can I ask a question real quick?
Yes, who's that, Jamie?
You mentioned, I liked the terms that you were just using, the first-time buyer, the move-up buyer, like you obviously have categories. Would you say that Union Home Mortgage has a particular type of buyer specialty? Or obviously you can handle all of them, but is there some kind of sweet spot that we should think about too?
That's a great question, Jamie, but really not. I mean, we have loan products for every situation, for every buyer, and we absolutely we cover everything from A to Z. Now, I can tell you this. As I think of that, if you have somebody that is let's just say they're an 800 credit score and they're putting 25% down and they're going to shop me for rates, it's probably not going to be with me. Okay, they're probably not going to do their loan with me. It's not because we have high rates, but that's the most important thing sometimes to the people, right? And so they may put themselves in a spot where they can get a better loan somewhere else. And I will tell you this, if I'm talking to your buyers and they ask me the question, I will tell them, yes, you might want to go to Third Federal. It might be a better fit for you, okay? And so that is one of the things that I pride myself on. If I can't do a loan for some reason, first of all, if I can't do the loan, I really feel that 99% of the time nobody can. But if there is a case where somebody's like, hey, I'm going to go to Third Federal and check out their rates. I mean, our rates are always going to be middle of the road. We're not always going to say we're the lowest. We're not always the highest, but we are always going to kill it on service, and we're going to make you guys look good. Okay. And so there's something to be said. As a Keller Williams agent, you guys are not the cheapest in selling a house and listing a house. You're not. You bring something to the table that has great value. Okay. We pride ourselves in the exact same thing. Union Home Mortgage gets set apart based on our service, based on the simplicity and the ease and all the things that we bring together, and we give a great loan product as well. Okay. So Jamie, to answer that, probably just the extreme heavy down payment, great closing or a great credit score and rate sensitive, then I probably will let that one go real quickly. But I'll always be there to help and at least go through it with them and or help you guys and get them pre-approved. But then there's a chance that they may go somewhere else.
Sure.
Does that make sense?
Okay. Yeah, that's perfect. Thank you.
You got it. You got it. So any other questions before I switch cameras here? Nope. Cool. Let me figure out how to do this. There it is. Sorry, not super proficient here.
Very good. It's your first time using this. There you go.
First time using Teams, Microsoft Teams.
Yeah.
So I'm here at the office. Welcome new Golden Group new agents. A lot of times we'll have a welcome board like this for your client, but one of my assistants has real cool fancy writing, and she puts this real nice sign up there. So when your clients log on, that's the first thing that they see. It's just a nice touch. We used to have a welcome board at our front desk where it's on a big screen where they'd walk in and it would say, welcome future homeowners, Mr. and Mrs. Smith, and they walk in feeling real good about that. So I think I learned that from a dental office that they used to do it. Every time I took my kids in, my kids got the biggest kick that their name was on the board, right? And I'm just sitting there going, here I am writing another check for them, and my kids are getting a kick out of it. So, so anyway, what I do is I start talking to your customer, and I tell them, we're going to paint a picture of your scenario, which will then allow me to make some suggestions as far as types of loan products that might be available for you. And so what I need to do is ask you those questions. And I always ask them if they're in a position to talk, because if they're driving in their car with their mother-in-law and they don't want their mother-in-law to know how much money they make. So I always make sure I'm a little bit sensitive to that. Again, just trying to think of them. So, and then if we're in a conference room like this, I will literally do this. And I'm going to show you exactly what I do. We take a look at your income. We take a look at your credit. We look at your monthly reoccurring debt. And we look at the money that you have in the bank, okay? And so we start the dance like this. And I find out where they are currently. Let's say they rent and they pay rent at $1,000 per month. And then I always ask them, and it's an extremely important question, is where do you want your monthly payment to be? What's your comfort range? I don't want to just say, hey, you qualify for a $400,000 home. That's what you should be doing. And if they say, well, my comfort range is $1,000 or $1,500 a month, it's my job to bring their expectations and reality into line so they're not going to be disappointed as they're out there looking at houses, okay? And so they're renting at $1,000. I always ask them at that point, where do you want to be? What's your comfort range for your principal, interest, taxes, and insurance, your total payment? I'll explain that to them, how it includes multiple things. They'll give me their number. And to me, that's the most important number. Let's just say it's $1,500 a month. That's more important than just about anything else because they have their own budget. They know the lifestyle that they want. They know how they spend their money. They know what their plans are if one spouse isn't going to work or the other, So we try to always, make sure we're at least cognizant of that scenario right there. So we take their gross monthly income, and I know you guys are in the middle of class, so some of this is going to be redundant, but some of it's also going to help you, okay? Because when you pre-qualify somebody, you go through some calculations. So let's just say they make $72,000 a year. That's $6,000 a month of gross monthly income, okay? And so what we do is we take 45% of that number, and I've got my calculator here because I don't have this memorized. And that's going to equal $2,700. Okay, now what that equals is what their total allowable debt are. It's allowed to be their debt for their car, their credit cards, their personal loans, their student loans, child support, alimony, and their house payment all have to fit into that bucket. Okay, and then we always take a look at their credit. And let's just say they have a 720 credit score. Okay, so in my mind, when I hear and I run their credit and it's 720, then I know I'm probably looking at a conventional loan for them, right? We've got all kinds of loans. We've got the conventional loan, the FHA loan, the VA loan, the USDA loan. We currently are on hold for a product called non-QM. That's kind of like a subprime loan that's on hold right now because of COVID. And then, of course, we have new construction loans as well, okay? And so depending on their scenario, in my mind, I'm already thinking this is going to be a conventional loan because of where their credit score is, okay? Now, I'm not gonna force them and tell them they have to go one way or the other, but I'm going to at least explain to them the pros and the cons because these people might have called and said, hey, we want to go FHA. Well, if you got a 720 credit score and you have 5% down, maybe that's a better loan product because of reasons that they might not know that I happen to know, like the PMI will eventually go away, and on an FHA loan, it will never go away. So there's these pros and cons, and it's part of my education to them on teaching them this. So and let's say they have about $800 for credit card payments, car payments, everything. All their monthly reoccurring debt is $800. Well, what you do is you take this $800 and you subtract it from this number, okay? And that leaves $1,900 is what they qualify for a total principal and interest, taxes, and insurance payment, total house payment, okay? And as long as this number is higher than where they want to be, we're on the right page. Does that make sense? You guys with me? Okay.
Bill, what
so
qualifies?
this is,
Hey, Bill, really quick, what qualifies exactly as reoccurring debt? I know you said car. Let me actually be a little more specific. What does not qualify as reoccurring debt? Like utilities,
cell phone bill, insurance, and things like that. That's
Yeah.
already factored into this 45%.
Yeah.
Okay,
Gotcha.
that's the other 55%. That's, hey, this is gross earnings. What about my net earnings? That's the other 55% of that. So really, it's the items that are typically on a credit report, which would be student loans, car payments, credit cards, personal loans, installment loans, things like that. And then we always have to find out if there's child support or alimony. It's part of my pre-qualification form that I use. We go through and we ask them the questions. We go through and ask them everything about their life because we have to make sure that we don't miss it. Okay, there's nothing worse than a new lender in the industry and a new realtor, and then all of a sudden they're like, oh, I forgot to ask if they had to pay child support. Well, it came out at the very end, and all of a sudden you got a dead deal. Okay, I mean, there's horror stories like crazy like that, always. So so it's knowing what you need to ask, Eddie, to that point. And there is, it's funny because on a VA loan, daycare is also part of that calculation on a VA loan only. Okay, so yeah, so you can get bit really bad on that one if you don't ask the question.
Wow.
Yeah, yeah. So if the people pay daycare and it's on their tax returns, that is a debt that's included as part of their debt to income ratio. And if any of you guys have kids, daycare is extremely expensive.
Yeah,
right.
that's
And
really
I mean,
interesting.
daycare can actually kill a deal.
Yeah, I'd never
Yeah.
heard that. That's really interesting.
Yeah, and again, that's only on a VA loan. So VA's got a couple little quirks. It's a great loan product. You can go with a 0 down payment, and for many other reasons, it's a great product. So anyway, so here's where we're qualifying, okay? And then we have to figure out how much money the people have to work with. And this is always a kind of a sticky thing. Some people go, well, I have $3,000. Okay, well, that limits us really quick on what we're doing. So then we start asking them, well, do you have a 401k? Do you have mutual funds? Do you have an IRA? Is there any gift money that's possible? My job is to be the problem solver. You guys present a buyer to me, and it's my job. It's like a puzzle, right? For me, it's a puzzle. I go through this dance, and I start just pulling all the pieces of the puzzle, and I always tell them, I'm going to do an analysis of this, and I'm going to call you tomorrow or later today with the next step, okay? And then at that point, I've got something figured out. Now, if I can't figure out an answer or a solution, I will give them 3, 4, 5 different options. Hey, can you do this? Can you do that? Can you do? And they're like, no, 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 no. And then eventually it's like, I'm sorry, we can't help. But it's my job really to really get as much information from them. And I even tell them up front, I have to ask you a lot of questions because it's my job to make sure I come up with the right loan product for you, and I can give you the best guidance available. Okay, and so that's kind of like the dance in the beginning. So your credit drives what kind of loan, your debt to income ratio, and then the money out of pocket. So it's kind of a culmination of all of this. Okay, questions on that at all? Eddie, any questions on that?
No, I think that's pretty good.
Does that make sense?
Mm-hmm.
Okay, and so once we've determined what they qualify for, and then we figure out what they want, I'll always ask them this because everybody's got their dream house. Oh, I looked at this one the other day, and I tell them, I said, well, give me that example, and then I will literally go through the process of calculating this out for them, right? I mean, I'll literally right here in the conference room, they'll say, okay, yep, we found this one house over on Redwood and Avon Lake for $185,000, and we've got some money, and so maybe we're going to look at the money needed. Down payment, 5%. Okay, so I'll go through this calculation with them too. And we'll start mapping out how much money is needed for the transaction. $9,250 for your down payment. Okay, 185. That's a 175, 750 loan. The other thing is when I map this out for them on the whiteboard, before I erase it, I have them take a picture of it with their phone, because then they have something to see. I also take a picture of it on the phone and I write their initials in the lower left-hand corner. So we have the same talking point. Okay, if they have a question about it. Also, I do it this way because I want, at the time of the application, when we actually do their actual loan, I love when it unfolds like we've already explained it to them. And so they're already anticipating and expecting it to be this way. Okay, so it works out well. In this example, down payment, we got closing costs. Closing costs are going to be about $3,800. What are closing costs? Eddie, what would you say closing costs are?
Any costs associated with the purchase of the home?
Any costs associated with the loan, actually, with the purchase of the home that has to do with the loan. You know, home inspection is a separate fee, but you're right. It's the fees that are incurred in order for us to do a loan, and they come from there are many different things, right? Our closing costs of the $3,800, we have our fixed cost on our conventional loans. It's about $1,265. On an FHA loan, it's about $1,370. So those are our hard costs on every loan we do. Doesn't matter what the price is. It doesn't matter. So it's not relevant. It's our hard costs that we have. But then you have all the other services. You've got the title company. And I explain it to people, you know, here is us, the lender and the buyer, and here's the seller. Okay. Well, we don't just give the money to the seller. We have to use a third party, the title company. And so the title company has many tasks that they have to do. They have to make sure that the title's free and clear of any liens. They have to bring the taxes up to date. They orchestrate the title insurance. They handle recording, and they handle a whole bunch of things. So we've got the title company. Then we've got a survey that's done on the property. So I start explaining some of this to the buyer to let them know that that's all part of the closing cost. Then you might have points. Points are a fee that you pay sometimes to get a better interest rate. So in this example, let's just put 1 point in here, just so we can get even a better interest rate. Then you have what's known as your prepaids. Your prepaids, these are items that you pay up front as part of the transaction. They go somewhere in the beginning. You have to pay for your first year homeowner's insurance up front, okay? So let's say the homeowner's insurance is $840. Well, guess what? We take that homeowner's insurance, divide it by 12, and then that's part of your monthly payment because we're collecting it up front. And then every month when they make a house payment, there's a portion of that money that goes into an escrow account, okay? That would be your taxes and your insurance, okay? And let's, in this example, just say the taxes are $250. Then you're gonna have what's known as PMI, and then you're gonna have your principal and interest, okay? So these two items, when you make a house payment, every month go into an escrow account, and we're accumulating them, okay? And the purpose of that is when the tax bill comes due every 6 months, $1,500, we pay that out of the escrow account, okay? So it's not that they have to manage it, and it's not an option. It has to be part of their payment. It becomes an option if you put 20% down, okay? Homeowners insurance, they can use whoever they want, but we have to pay for that first year up front, and then the first payment, we're collecting 1/12 of it every month. We're loading up an escrow account. So next year when the insurance comes due, we pay it automatically. So homeowners insurance is always paid 1 year in advance, basically, okay? And then you're gonna have PMI, which is private mortgage insurance. We've got many options on this. We have ways to eliminate it, and so it doesn't even happen. We've got and again, that's credit score driven, but there's many different things we can do. There could be a monthly amount, there could be a one-time upfront PMI. In this example, we're just going to say there's a $75 monthly PMI fee. In this example, I'm going to use a 3% interest rate on a 30-year fixed loan, and we're going to work up a house payment for these people. So we got $175, $750 as your loan amount, 3% interest. That is a principal and interest payment of $741 plus $250 plus 70 plus 75, that's a payment of $1,135. Okay, so I will work this up for people, and I will go through this example, and they're excited because they want to be at $1,500 and they thought they could only buy $185. Well, $1,500 maybe can get them a little more than what they were thinking. Okay, so we go through this all the time. So then the prepaids, let me get you a total here. So prepaids are this. So when you guys buy a house, or do you guys own houses? Paul, do you own a house?
Uh-huh.
Okay. Megan, do you own a house?
Yeah.
Okay. So you guys have an escrow, right? You know how that works, right? So when you buy a house, and this is great when I tell people that rent, and you tell them that you get to skip a payment, and that's a great thing, right? They buy a house in August, they get their keys in October, their first payment's not due until December. I mean, they talk about people getting excited, they're elated, right? Because it's opposite of rent. Rent on the first of the month is for the month you're getting ready to live in, When you own a home, you're paying for last month's interest. So because of that, we have to set aside 2 months of escrow, taxes and insurance, kind of to jumpstart the escrow account. So I take the 250 plus the 70 times 2, and then the first year homeowners insurance. So, we're at about $1,700 on prepaids here. So this is the total money that they're going to need to buy the house. The other thing is, guys, we know in this fast moving market that it's not a real good idea to ask for concessions right now, because you're going to probably lose out on the deal, right? Would you agree with that, Eddie?
Yeah, or if you do, you have to go like over ask and ask from back, and that you risk the appraisal. So
you got it, yeah. And then, but when you're in multiple offers, they want the cleanest one. They want, there's all the little things and the little techniques that you can do to entice the seller to take your offer. But asking for a concession is not one of them. Okay, that goes the other way. You could say, hey, we like the house and I don't want a home inspection because I really think the house is great. A seller's going to love that, right? I don't recommend it, but that does happen, right? Seller, Eddie, do you recommend that?
yeah. No, I'd never recommend that personally.
Yeah. So
I do a home inspection on almost everything personally. I mean, every so often.
Oh yeah, I tell people, I go, you know what, guys, it's an option, but as far as I'm concerned, the dad in me tells you it's not an option. Okay,
right.
You got to do it. Could save you tens of thousands of dollars. So other things, that you guys, Eddie, I know you got other tactics. You can put more earnest money down. Sometimes that's enticing, right? Or sometimes you can write a letter explaining to the old lady that's been there 67 years why you want her house, and they'll, pull on the heartstrings. So you're going to get, that's all going on in the industry right now. So Eddie, are you getting any of those offers?
Oh yeah, like all sorts of interesting things, like closing date flexibility, possession date flexibility. We had buyers that were willing to pay the seller's closing costs. Even though you could say, hey, I'm willing to go up in price, or you could say, hey, I'm willing to pay your closing costs as a buyer paying the sellers, which is very uncommon. There's all sorts of little unique techniques. Obviously, normally just write the highest price.
Right.
That's normally the easiest way.
And have a solid pre-approval, right?
Yeah.
That's
yes.
the key.
Very,
And that's where we're going to get here in a minute. So anyway, I'll go through this and we'll just make the connection here and people get it, and then we'll start giving them the green light. Once we've got somebody pre-approved, it starts off this way. It starts out as a phone call, and then that's a pre-qual, right? That's based on verbal information. They give me all this verbal information on the phone. The next step is getting pre-approved. After we pre-qualify your buyer, I tell them this, and this is a key sales phrase. Here's what we need to do next, right? People need to be led, right? As your buyers, when they see their house, that they like, you have to tell them, well, here's what we need to do next. Let's go back to the office. We're going to write up an offer. You have to guide them. You're the one that's in charge. It's your profession. So we do the same thing. Here's what we need to do next. You're pre-qualified, but now we need to get you pre-approved. And we send them a link to a secure portal. And I just tell them, you're going to get a link to a secure portal with a list of documents that you need to upload in the next 24 hours, tax returns, pay stubs, and bank statements. That way, when you go out looking at a home, I will issue a pre-approval certificate customized to that address to let the seller know that you're pre-approved for that house. Okay. And that just works out well. If somebody's pre-approved for a $400,000 home, personally, I don't give a pre-approval certificate for $400,000, especially if they're looking at a $200,000 home. Okay. That's just me and the way I've done it for 27 years. The other reason I do it that way is I really don't want an offer to be written per se without me being very involved with guiding. Okay. If we do need to ask for a concession, if we have to be sensitive to the dates, we just have to be able to talk through that. Plus, the buyer has entrusted me to give them accurate numbers. And if all of a sudden they go buy a house and we didn't work out these numbers and the taxes are twice as much as they thought, all of a sudden they've got themselves in a jam. Just don't like to have that happen. I always explain to the buyers that it's a communication piece between you, the agent, the lender, and the buyer, and we all work together. And that's why, the accessibility and having a lender that's willing to work on Saturdays, Sundays, evenings, weekends, holidays, that's what we do. Okay, that's just part of our DNA on how we do it. Any other questions on this before I sit back down? Because I'm going to go over some other things here. We good there? Okay.
Yep.
Jamie, did you stay with us? I didn't know she was going to try
I
to go.
am still
video on it.
here, yes.
Cool.
Thank
Okay.
you.
So when we go, I'm going to show you what I do. I'm going to do a screen share because there's a couple of things that I think is really, really important that I want to share with you. So let me find what I want to share, and then I'm going to pop it up on the screen. Jamie, I'm not sure. Are you in front of a computer yet?
I'm logging into Teams on my computer right now, so I'll be able
Cool.
to take a peek momentarily.
Okay. Well, great. I'm going to go ahead, and I think the screen, can you guys see that screen? Is there anything showing up yet?
Yeah.
Okay,
Got
and it's
it.
got some PDFs right here. Can you see this?
Yep.
Cool. Okay, so when we go to present an offer, there's a couple of things that I like to do. First of all, again, we'll customize the pre-approval certificate. Okay, and this is someone that we just did a loan in Florida for, so she'll never know that we shared her personal information. Sorry.
Oh, Aunt Diana.
Oh, stop. She's from the east side. Get out.
Yeah.
I thought about that. That's funny. So anyway, we'll issue the pre-approval certificate. And in this particular case, again, we just customized it to the address, right? And so then whatever the list price is, she's pre-approved for that. And it just, it's kind of vague. It says using verified information and a tri-merge credit report. It's not a commitment to lend, but this is what's needed. And then the other great thing about this is we send a why you should accept this offer, because some people don't know who Union Home Mortgage is. So we like to say the attached pre-approval letter form confirms in great detail that the buyer is well qualified, but that's only half the story, isn't it? Who are the major mortgage professionals that will be assisting? So then it's just a little bio on me, which is not quite updated because I need to add a couple of years on there. And then a little bit about Union Home Mortgage. That's me pre-COVID, before I didn't have a beard. And then a little bit about Union Home. And we always invite people to check us out because we love the raving reviews that we get, and the status of who we are and what we stand for. The owner of our company is probably one of the greatest guys. He's a dear friend of mine. His name's Bill Cosgrove, and it's probably the guy with some of the most unbelievable integrity that I've ever been around, and what we do and how we take care of people. So we send that as part of that, the pre-approval letter. We have those two things, and it's just good to. And we'll also give a little outline of the actual, conventional loan, 5% down. Eddie, did you get that one yesterday, by the way?
I did. Yep.
Yep. How'd that go? I didn't send that to you. I sent it to the Mullins.
Yeah, I am waiting to hear. It's lower than where, so it's gonna be but we'll see.
Okay. So one of the things we were talking about is we do a status update. So every week, whatever team player, so I have my multiple assistants, but whoever's working on the loan, it could be one of these people. It'll probably be Judy or Emily right now. Kyle's a new loan officer with us. He's my son, yep. And then I've got a couple other people. But Emily and Judy, what they will do every Friday is they will send out the status update. And the status update is there. So going into the weekend, if anybody wants to know what the status is of the loan, it just has all the information right here. And it just tells you that way, if the seller asks or you guys are wondering, and the highlighted assistant will be down here on who it is. Very helpful, very helpful.
Do you have an example of your update, like one of your updates that you guys do with just move to?
Yeah, like a video update, you mean?
Yeah.
Yeah, I do actually. Bear with me for 1 second. I'd love to show one of those. Those are cool. Yeah, let me grab one of those. Let's see, where were we last week?
I remember who my last one would know. I'll find one. I can send it out to you.
Yeah. I should have had one of those handy because those are pretty cool.
Yeah.
Our loan process, we go through a couple different scenarios with the client. We always give them one of these, and this has the bullet points of where we are. And I'm going to send these to you guys as well because it's good to have. Okay. And again, every time we move to one of these different milestones, that's when one of those videos goes out that Eddie's referring to. We just put this piece together, which to me, I think is really cool. It's kind of fun. And so literally it walks you through kind of what we've been talking about today. You know, here's the pre-qualification where we start. That's where we analyze the income, the debt, the credit. Then of course, we're always talking about working with the realtors. And then when they go to write an offer, you use a pre-approval letter, as we mentioned. So we go through this with your buyer. Then they enter into a contract. At that time, we remind them they need homeowners insurance, and then we'll schedule our application. 90% of my applications right now, I'm still doing face-to-face via this conference like we're doing right now, because I want to just go through and just give them that, you know, they deserve it. It's one of the biggest purchases of their life. Instead of just sending them docs and say, sign it all and figure it out, I just don't like doing that. I go through the docs with them, and I'll just give them about a 3-second bullet points about the docs as they're signing them. At that time also, that's when we collect the fee for the appraisal. We never order the appraisal until after we know the home inspection is clear. I don't want to spend their money if an inspection is going to kill the deal. Then I explain the loan jumps into processing. The processor's job is to get the loan moved through into underwriting. So right now in our industry, guys, we have a little bit of a bog down, right? There's a little bit, you know, with appraisers are bogged down, home inspectors are bogged down. Everybody's kind of bogged down in the industry. Processing and underwriting, the same thing. Title company, then clear to close, schedule the closing. If there's a final walkthrough schedule, then they do it. We close, we explain how, you know, everybody signs. Now in our area, we do escrow closings, which is different than roundtable closings. We have sometimes people come in from out of state and they're thinking that they have to meet the seller and meet the attorney for the seller and meet in a room and everybody sign at once. But that's not what we do here. We do what's known as escrow closings. You guys might be learning about that in your real estate classes, I would assume. And then we do a survey, as I mentioned, because we want to make sure that we're taking care of them. And we're always forever, you know, talking about you guys. It's just what we do. It's how we do it. How'd you meet Eddie? You know, oh, you're so lucky. He's one of the top agents in the area. He's going to take great care of you. You know, and we'll be doing the same with you guys as well. Okay. And then let's see, what else do I have here? Couple last minute do's and don'ts. I always share these with the customer. It's kind of funny, but it's some simple stuff that they just, you know, they need to hear it. Of course, asking questions, no questions too small. We try to make them, you know, we try to empower them to make sure that they feel good about communicating with us. Get us our stuff that we need quickly because of the condensed industry right now. If anything happens with their job or credit, they have to let us know. I mean, right now, the crazy thing is somebody could get fired from their job today and they could be closing Monday and they think they don't have to tell us. Well, we will find out. Okay. We literally will call their job the day that they close to make sure that they're working. I've had somebody just recently that said, well, my dad told me not to worry about it because I was going to get a new job working with him and I could afford the payment. Well, it didn't work, you know, so you lost your job. You can't get a loan. We can't close anymore. And the dad thought he could fake us out. And so unfortunately, he couldn't fake us out. And we tell people to work on your homeowner's insurance. Union Home actually has their own insurance company and we have amazing rates. And so when people go, well, who do I call? We automatically give them a courtesy quote for homeowner's insurance. But then I just tell them, hey, you know, call, you know, whoever your parents have used or who do you use for your cars or who do you presently use? And then, of course, let us know if there's anything on the home inspections because we don't want to, again, spend their money. A couple of don'ts we always explain to your clients is please don't just go deposit cash in your account and think it's okay because there is a money laundering guidelines. We actually have to have 2 months of bank statements and all the money and deposits have to be verified. So when somebody calls me and I'm pre-qualifying them and they're like, well, I got $10,000 cash in my house, how do I use that? I mean, first of all, I thank them for telling me because I'm the filter. It's important that they understand, they tell me everything, and I will help them on how we can introduce everything that's legal. And so that way we don't have any problems. I ask them to please don't overdraw your bank account. Don't open any new credit. You know, that's the kiss of death. A lot of times people will be in the midst of underwriting. And if we haven't told them, don't go to Levin Furniture and fill your house up with furniture before you got your loan. I mean, inevitably it happens. People, they blank out, they don't hear me, even though we hit it like 4 different times. So then we just got to scramble. And I always, I had one woman, we actually had a house built, new construction, and 2 weeks before closing was Christmas, and she went and opened up 2 jewelry credit cards and spent $8,000 on jewelry for her family members. Her credit score was already at 640, so now her credit score dropped to 600. We couldn't close on her new construction house, and she was mad at me. And she said, "You never told me this." And I said, Delana, I told you this because I've been saying it for 27 years. Well, you didn't tell me I couldn't do that. And so anyway, long story short, she had to return the jewelry. We had to rescore her credit, get it, and then it closed a couple weeks late, but we still did it. But it's just so important that people listen. Don't open any new credit, and of course, please don't quit your jobs. People laugh. I mean, I make light of it, so I try to get them to be engaged on that. Anybody have any questions on any of these things that I've shared with you thus far? No.
Bill, I don't have a question on the slide that we're looking at right now, but just in general, as we're thinking about all of the, like privilege, so to speak, information that buyers are going to be sharing with you. I know that as real estate agents, and I'm sorry, you hear my baby. That's why I didn't put myself on camera yet.
That's okay.
We'll be held to a fiduciary. So is that the same in your world as far as confidential information and such?
Oh, absolutely. Yeah,
Okay.
we're like doctor-patient confidentiality. We have what's known as the Privacy Act, which we have to adhere to. And no, that's very tight. Yeah, that's very tight. So I will speak general, in general terms. For instance, if you give me somebody and they're not eligible to buy, I'll let you know they're not eligible to buy. And at this point, there's some things we need to work on. If I want to share more than that, I can't do that without getting their permission. Okay. Eddie, you're muted.
Sorry about that.
Sorry.
The amount of financial information I've ever received on a client is so minimal. Like, I mean, I've sold 500 something houses. I know how much one person made, like in their yearly income. Like, it's better just to, know the basics enough to make it sound like you know what you're talking about, and then send the information over to Bill, or to just to have them kind of dig into it deeper and give them more factual information, because we're not lenders, we just can sound smart.
That's a great point. I always say this, and first of all, you'll never have to apologize for sending me a bad lead, right? There's no such thing as a bad lead, right? It's not a bad lead. It's just like you guys, we work our numbers. There's a ratio of leads I get per month that will turn into good pre-quals, to good pre-approvals, to purchases, but we have to work our numbers. And that's where you take the emotion out of it. If it's a bad lead, that's okay. It's a lead. So I'm going to encourage you guys when you're in sales, it's about you talk to the masses, right? You don't just try to be a sharpshooter and try to just find one person. You talk to the masses. You offer your services to the masses, right? And so I don't mind one bit if you guys give me a referral and I run their credit, and it's a 540 credit score. I mean, agents, they apologize to me. I'm like, please don't apologize. This is my job, right? I'm going through, I'm helping you. You got to filter them. I'm your filter. Use me as the filter. Then you can give me 25 that are terrible. That's okay, because eventually there's a good one in there. And it's just, once you get to know what your ratios are, for instance, in the industry, it's about 25 to 30% of the referrals we get actually turn into loans. 25 to 30%. That's it, right? Yeah, 25, 30%.
One of the nice things that Bill does too, that if they don't qualify, Bill will give them like a path of like, hey, you should pay off this credit card, or you should focus on this, so that, in 90 days when they can reassess their taxes, then, you can, be ready to go with them, hopefully, or even down the line.
That's exactly right. Thanks, Eddie. We actually call it our game plan. So we will, and I just turn the pre-qual sheet over, and I'll turn it over to one of my assistants. I said, game plan, 60 days, paying off collections, rerun credit, game plan. They put it in, it goes into our calendar. We call them in 60 days. I mean, and then I call you back and go, hey, guess what? Remember those people you guys gave me? Guess what? Now they're ready to go. I mean, that's a great call. I love making those calls.
Yeah.
So, I mean, it's, yeah. So great point. We also, ongoing, I work with a lot of agents, new agents, seasoned agents, and I am, I coach other loan officers in our industry, in our business for my company. We have a coaching program. And so I am a coach, but I also coach other agents, real estate agents. And so if you ever, if we ever want to get to that point, Eddie, this is something you and I should talk about a little further too, is I coach real estate agents in groups. We talk about what do we do on Mondays? We call them our theme days. Okay. So we have actual theme days for realtors. What do you do on Mondays? What do you do on Tuesdays? What do you do on Wednesdays? What do you do on Thursdays? And you time block some power hours. And that's when you're on the phone. And so then we help you create lists, and then we help you track your leads, and then help you follow up on the leads. So these are all things that you're going to eventually, as you're building your business and you're getting out there, these are things and tools that you'll eventually be using and wanting to use. Eddie's the master of it. He's been doing it for a long time, but you guys are on the path to get there. And we can always get better, right? We can always get better. You never arrive. And I get coached every 2 weeks. I have a coach. Even the greatest athletes in the world need coaches, right?
Mm-hmm.
Because they got to get refined. They want to get better. They don't want to get complacent. I live by and say this all the time. You're either green and growing or ripe and rotten. And I don't want to get ripe and rotten. So I want to keep keeping green and growing. So, Eddie, what else can I hit on? Anything right now?
Can you go over the main differences between conventional FHA and probably those two, conventional FHA and maybe VA. Those are probably the main ones.
Yep, great question. So a couple of things. FHA, let's go there first. FHA allows a borrower that may have some tarnished credit. You can have a bankruptcy that's been discharged 2 years, and you can go FHA and buy a house. They allow a lower credit score. Their monthly PMI on an FHA loan is the same no matter what your credit score is. Okay, so you could have a 620 credit score, 720, or 820. The PMI is the same. On a conventional loan, contrary to those statements, on a conventional loan, you have to wait 4 years after a bankruptcy to go get financing. Your PMI is extremely credit sensitive. If you have a 620 credit score with PMI, your PMI will be multiple hundreds of dollars a month, whereas on FHA, it might only be like $90. Okay. So again, the process of, discerning which is the better way for your client to go is what I do. It's good for you guys to have a little bit of this knowledge, like Eddie was saying, just enough to have a good conversation with somebody. But then, when they start getting technical and they start saying, that's a great question. Let me have Bill give you a call. Okay. That's a great question. Let me have Bill give you a call, because I don't want to give you the wrong answer. That's what, it's a great way to live. And so, again, we'll look at the borrower, the amount of money out of pocket. With an FHA loan, you can buy a home with a 3.5% down payment, and you can have the seller pay up to 6% of the price as a concession. On a conventional loan, if you're going with minimum down, and we do have conventional loans at 3% down, but there's an income cap at about $60,000 they can't exceed. But on a conventional loan, the seller's only allowed to pay 3% of your closing cost, okay, unless you're at a 10% down payment. So once you're at 10%, then they can actually pay up to 6%. So but those are some of the features that we look at. So my mind is trained to instantly, as I'm talking to somebody, I already have an idea based on those questions that I've asked them. Have you ever had a bankruptcy? Have you ever had a foreclosure? Oh, I had a bankruptcy. It was discharged 2 years ago. Great. Boom. FHA, right? That's where we're going. FHA. There's no other conversation. Okay. It's FHA. And so those are some of the little, variances between those that I can think of. Now, there are also with FHA, there's an income or a county loan limit, which is it's $331,760. It's the maximum loan that you can get when you go FHA. Okay. Whereas conventional, you can go up to $510,000. So sometimes if somebody had bankruptcy 2 years ago and they're looking at a $500,000 home, they better have a pretty darn good big down payment because the max loan is going to be 331. Okay. So again, this is where we start coming up with solutions and trying to solve the puzzle, because that's what it's always like. It's a puzzle going through this. So good point, Eddie. Thanks for bringing that up.
And another difference, just to comment on those two, is FHA loans are a little stricter on the appraisal. So if the house needs more work, chipped paints, like hand railings galore, those things, it's going to need to go conventional or renovate. Bill, do you guys do renovation loans?
Yeah, we've got 2 renovation loans. We do a 203K, which is an FHA loan. And so when I'm talking to somebody and their credit score is not really good and they want to do a renovation loan, then we'll look at the 203K. Or we have what's known as a Fannie Mae. It's called a home style renovation loan. So we do both of those, and we do them quite well, actually. I mean, we've got a whole department that handles those for us. So
we'll dig into that a different day.
That's not something that I strongly recommend people doing, because if they're emotionally attached to the house, it's going to be a rough ride, because it is a very, very difficult loan. Okay. People watch HGTV and they go, oh, this is so easy, we're going to do this. Well, it's not that easy. You know? And so I just watch, my daughters watch that show and I just shake my head and go, oh my gosh, I can't believe, oh yeah, we're going to get this and we got the extra money from our loan. And so people call me up and they go, well, I want to buy a home for 100, but I know it's worth 150, so I want the loan for 150. Is that okay? And I'm like, no, that's not okay. And they just want the extra 50 cash to go do what they want. Well, it doesn't work that way. So, but we have those loan products. Again, it's not for the crazy busy couple that doesn't have time to, if they're too busy, that's not going to be a good loan product, because you have to have a lot of attention for that loan, a lot of due diligence, a lot of behind the scenes things. You got to meet with contractors. I mean, it is a pain in the butt. So
and your closing costs are much higher too.
Costs are higher, rates are higher, for sure. Yeah. So good point. New construction, we do construction loans. We do conventional construction loans, FHA construction loans, and VA construction loans. So we have been doing those for a number of years. That's a great loan product if you have somebody that's looking to build on their own lot or go into a development and build with a specific builder. We have that loan product. So
and to brag on Bill a little bit, which is why another reason why Bill's a great resource, is Bill was the national the lender for KHOV, like KHOVinian.
Yep.
And I don't know, a couple other lenders, but
KHOV's my main, and I'm doing loans for KHOV in Florida and in South Carolina as well. So, and by the way, I'm licensed in both of those. So if you guys have anybody that says, hey, we want to buy a second home in South Carolina, I'm there, and really, if anybody ever says anything mortgage, I would suggest you guys start with me, because I have just got a ton of resources. And, if they say, hey, we want to go build a home in Texas, or whatever, start with me. We've got partners in 44 states. And so I then at that point will know who to talk. And I know most of them. I've been with the company so long, I know just about everybody. And so I would, again, it's an extension of you, right? Which means I'm going to make sure that it's handled properly instead of just telling them to go to Texas and try to figure it out. So, Eddie, do you guys have, like, for your buyers, a buyer packet?
Yeah.
Okay. When you get a chance, can you send me an updated one? I haven't seen one in a while.
Yeah, we do like a digital magazine through FlipSnack.
Cool.
So I can send it to you pretty easy.
Love to see that. Eddie, what's your philosophy on the 3-lender rule?
So we have here, I'll show you how we kind of have it in ours. We do have 3 lenders in our team, like in our preferred vendor list. I think we have it in our marketing folder or channel here. Yeah, here it is. But Bill, you are like, it's kind of like you're very front and center of it. Let me find where it is.
Well, thank you.
Yeah, here it is. Here, I'm going to do a screen share.
Okay.
So you kind of see what our preferred lend looks like. Okay. Okay. So this is kind of like our preferred vendor list, obviously. picture here. Here, the Union Home and his stuff's here, but we do have these other ones over here. The reason we have that is there is not just with lending, but with every time like that I've been taught, like when you refer a professional, you should be referring 3 professionals to protect you in case, God forbid, someone messes up and you refer just one person. They could be like, oh, you referred that person, they screwed me over, blah, blah, blah. But if you give them multiple options, then if they come back to you, then they chose that person. We obviously do everything we can to kind of direct stuff towards Bill, but
Yeah, thank you. I appreciate that.
yeah, like it's just there's certain types of things that we kind of run into sometimes where it's we just, out of protection for you guys, it's always good to recommend multiple professionals and not just lending with anything that you recommend. So
Cool. Yeah, and I knew that. I just wanted you to say it.
yeah, for
You just
sure.
wanted to see your pre-COVID no scruff picture in our.
Yeah, thank you. My team hates that picture. They're like, oh, get a better picture. Come on.
That's a great
Look-
picture. What are you talking about?
Thanks.
Bill, would you talk a little bit about the difference between what you offer versus a mortgage broker?
Well, I don't really know for sure what a mortgage broker offers, except they say that they shop the interest rate, right? Well, we deal with all these different investors and we're going to shop the interest rate. What they don't tell you is they then have to put in a bunch of fees, okay, to cover some of that, okay? Where we don't. We deal directly with Fannie Mae, Freddie Mac, and Ginnie Mae, which is for FHA and VA. So we don't have to add additional fees.
Okay.
So that's the only, in my earlier life, I was a mortgage broker. So I understand that game. So there's a different scenario there, where they're going to try to, the spin is they're going to try to, say, hey, we've got the cheapest. So, and again, I don't go to that mentality, right? I don't go to the cheapest mentality.
Right.
I go to, well, we're going to take great care of you. We're going to give you a great loan product at a very fair and competitive price. So good question, but I think that's all I really have about brokers. Also, when you're a broker, that means you sell the loan and go somewhere else. Okay. We don't sell our loans. Okay. We are the servicer. You make your payments to Union Home Mortgage. And when your clients have an issue or a question about their escrow account or something, or they want to change insurance, they start with me. And then we will go behind the scenes, talk to our servicing department, and then I'll put them in touch with the right people so they're not getting the runaround. So I love that. That's just a big thing for me, I think.
Sure. Okay, thank you. That's helpful.
Sure. Yep. Thank you. What else, guys? What else?
Have any questions? Or Megan, I know it's.
I have a quick
I'm
question.
still yeah, you go.
Oh.
Go ahead.
How does it work mortgage wise if someone has a mortgage on their house and then they want to buy a new home? They maybe are expecting to sell the house at the same time. So essentially they would have like 2 mortgages. Maybe they don't have a big down payment.
Megan, that is an issue live that we deal with every single day right now, right? And that's a great question. So when I pre-qualify somebody and I do that calculation like I did on the board,
Yeah.
if they currently have a mortgage, then that mortgage goes in as part of that calculation. If their income is high enough and they qualify still with their current mortgage payment, right, then they can go out and buy another home. But if that house has all their equity in it, right, their current home has, $50,000 worth of equity, then if we can do a conventional loan and if we can qualify them with both payments, and if they could get a 5% down and buy the new house with 5% down, and then when they sell their current home, we can then recast, okay, and we can take that money and we can put it in there and then lower their payment.
Okay.
So it just depends on their qualifications. Some people qualify with an extra, like 2 house payments. Some people make enough money to where they can go, oh yeah, no problem. But some people go, it's not even close.
Right.
So it just depends on the qualifications. But a great feature on our conventional loans is that recast feature where they don't have to refinance, right? They sell their home 3 months, 6 months, a year down the road, and we can take that $100,000 and we can put, join it with the current mortgage, and we recalculate and lower the balance or lower the payment.
Okay.
Sometimes we'll do it where there's 5% down and they have PMI. Well, they bring that extra $100,000 in, we recast, the PMI goes away and their payment goes way down. The rate stays the same. We're not worried about, because it's not a refinance. It's a recast. It's a $250 fee to do it. It's extremely popular right now because
Okay.
people are trying to, I have a house to sell and I want to buy a house, but I don't want to sell because what if there's not one for me to buy?
Right.
So, in those cases, I just tell people, get your house sold. Okay, go move in with your parents. Don't focus on the price, focus on the prize, and that's the end result, your brand new house. It's going to be inconvenient for a minute, but that's the only way you can make it happen, because people get paralyzed, right?
Yeah.
They're like, oh, I don't want to sell because then I want to buy, because they think they have to buy something that they have to settle for.
Right.
I tell them, there's 6-month rental places, Redwood Apartments, there's other in North Ridgeville and Avon. I mean, there's places where people can go rent. It sucks. You got to move for twice, it's terrible. But if you can move in with family or whatever, it's, we just try to coach people through it, and people get all hung up on stuff, and we just try to break it down a little at a time and just tell them it'll be okay. And again, focus on the prize. So
Okay.
It's a good question. Great question.
And Bill could also do like a pre-approval, like if subject to them selling. So if like the house is sold, he takes that out, and then it's like, oh, hey, if that wasn't factored in, it's like, oh,
Yeah, we can do contingent pre-approvals, of course. However, and again, I get creative. I'll say, hey, get your parents to co-sign for you on this house then. And then, when you sell your home, we can refinance you, or, whatever. We try to get as creative as we can. People their mindset gets in a little box, and I try to expand that. I just try to say, wait a minute, there's this way. Oh my gosh, I never even knew that. Right. So that's what we do.
That's awesome.
Yeah. Okay. Yeah, I want to be a resource for you guys for sure. So we'll do everything we can to make you look good and to earn your business. We take nothing for granted. Nothing for granted. We treat every one of your clients like they're gold. And we're super passionate about, my team is so passionate about making it a great transaction. So.
It sounds like it.
Golden.
Yeah, this has been really.
What'd you say, Eddie?
I said like they're golden.
Yeah, yes.
They're
Golden. We treat them like golden.
That's awesome.
Bill, are there any other like new agent errors that you see a lot?
Yes. Yes, there's definitely new agent errors. Sometimes it's closing dates, right? Not knowing, but again, I try to take that variable out of the formula by over communicating.
Mm-hmm.
So we're always going to be there. So that would be one. Probably just making promises that you really don't know you should be making, and saying things that you might not know for sure.
Right.
And please don't tell people, call Bill, he's got the lowest interest rate, because now you've teed it up for me to go, oh gosh, here we go.
Yeah.
Hey, Jamie told me to give you a call. She said you'll beat everybody's rate. And I'm like, and again, not saying we're going to have high rates, but see, rates are a function of many things. They're a function of the credit score, the down payment, the type of loan, so many different things, right? And it's like a matrix, and we plug it in, and then Fannie Mae says, okay, for that rate, here's where you're at. And if you want the lower rate, you pay a point or two, and then it comes down. So that's all. And not everybody is a 780 credit score. Not everybody can get the 2.875% 30-year fixed, because when you read the fine print on those, like on even at Third Federal, it's 20% down, 780 credit score, 30-day close. It's all this fine print with everybody. And so, and I just help educate people. Any other mistakes? Really? No. You're on a great team, so you're not going to make mistakes. You make sure you have people double checking stuff. That's all. You got Casey. You got a great team. So, yeah.
You were talking about, Fannie Mae and Freddie Mac and whatnot. And it sounds like you follow their guidelines. One of the things that I recall just in the classes that we were just taking was I think they said at some point the idea that, you know, if you don't sell to the secondary market, you probably have a little bit more creativity because you're not necessarily trying to follow it. But it sounds like you offer the best of both worlds, like this creative problem solving with your clients, but also you do kind of conform to the rules of the secondary market. Would I be saying that accurately?
Somewhat. I know where you're going. But
Okay.
Jamie, the ultimate answer is every broker sells to the secondary market.
Okay.
Every
Well-
broker. Brokers could sell to, for instance, brokers might sell to Union Home Mortgage. We have a wholesale, we call it our wholesale division, where all these brokers, even all in Ohio and Cleveland, they sell their loans to Union Home Mortgage, okay? And, or to Wells Fargo, and all of them follow the agency guidelines, okay? The difference is, when we deal directly with the agency, we don't have to put in additional credit overlays that were created because the broker, you know, might say, well, we have this overlay and we're selling it to Wells Fargo, and then they have this overlay. And that might not be Fannie Mae's overlay. They might have said, and this has happened especially during COVID, we've seen a lot of companies that they've created all these different overlays that Fannie Mae wasn't instilling, but different companies were, okay? And so, but like all the brokers, they all sell to Fannie or Freddie. It's all, you know, the bottom line. Now, there is a loan product called a non-QM, which is non-qualified mortgage. I alluded to this in the beginning. It's kind of like a subprime type of product, and where we don't have to follow agency guidelines. But that loan product has been on hold for a few months because of COVID. So, and that's a loan product that's more for self-employed borrowers that don't show any income, but they have bank statements that show they make $10,000 a month. Well, we could actually use their bank statements as their income instead of tax returns. So that's when that opens back up, that's a home run. We did a loan recently it was with a builder, and the buyer went to the builder's own in-house lender, and the lender said, go ahead and build the house. They're going to be fine. Well, they built the home, and it was a week before the people were supposed to move in, and they realized that the people had a bankruptcy a year ago. And so their own lender screwed up. Well, of course, they called me, please help me. And we were able to do it because we had a non-QM product where we could do it 1 day out of bankruptcy. No, it was a foreclosure. 1 day out of foreclosure. We did.
Oh.
Now, so picture this. The guy's rate was like 8.25, right?
Yeah.
But do you want the house?
Yeah.
Qualify, it's 8.25. Guess what? I'm refinancing him right now, putting him on a 2.75% rate. And he's saving $800 a month. I'm saving.
Wow.
So I did the loan to get him in, and a year later, when he cleared the bar, now I got him on a regular loan. And I mean, I feel like Santa Claus. I look like Santa Claus, now I feel like Santa Claus.
Like, over the course of the life of that's got to be over $100,000.
Oh,
with interest and everything factored in over 30
I'm
years.
saving him $800 a month. It's $288,000.
Amazing.
Happy day.
Oh my God.
He was really happy. Because I called him out of the blue, and he's like, oh, I didn't think I could do it yet. I go, you can do it. You can do it. Like, I called him the day after he could do it.
Wow.
So he was on my radar. Yeah,
Wow.
he was on my radar.
That's crazy.
Way to go.
Yeah. Awesome. Well, it's been great. Did anyone have any other questions?
Anybody, anything else? Are you guys doing ongoing training?
Yeah, we do we've been doing these every other Sunday.
Okay.
Our next one is about title. We have Emily McManaman with our title, with Erie View, coming in and talking to us about what is a title company.
Awesome. Yeah.
Things
great.
I had no idea what the heck a title company did until
I always just make that little analysis that I showed you.
Right? Yeah, 100%. Yeah, that was great. But honest to goodness, Bill, if you ask half of the real estate agents in Ohio, what does a title company do? They'd all give you some sort of generic kind of, but no one knows exactly. Like, or if most of them don't know exactly. So I don't know. I always just think that's funny.
Yeah.
But yeah, we've been doing these, and then we do our every other week. We do team meetings, and teams. So
yeah, I need to get back into those.
I know. Yeah, we do. Yep. We've cut it back to every other week now during the summer, just because it's too hard to get everyone.
Monday night.
Yeah, Monday nights at 8:30 still.
Yeah, so we just did because we were having trouble with you getting you in here. Now that it works, because remember we tried I don't know a while ago, and then we had to switch to Zoom because we couldn't get you into Teams.
Right.
Remember?
Yeah.
Yeah. So you're in.
I'm
Yay.
Yeah. Well, guys, if
all
there's
right, guys.
anything else, you know, obviously you have my contact information. I'd love, I'm going to send you guys an email of all the different PDFs that I shared with you. That way you just have them, okay? And you just have them there. And if you guys have questions, please, I'm here to help. You know, just looking forward to seeing you guys sell your first house. And it's going to be so cool. So welcome to a great industry.
Thank you so
Guys are
much.
so
This
young.
is
Thanks, Bill.
Appreciate
super
it.
You're
helpful.
welcome. It's my pleasure. Anything else at all? Anybody?
No. Just to give you a big shout out to Bill. Bill gave me a pre-approval yesterday on Saturday. So there's some lenders that don't work weekends and they don't work nights. So just to like that is more than you would ever imagine. Bill's working weekends, he works nights, he works Sundays. He's here with us on 2:30 on a Sunday, you know. So
I got somebody on your team texting me right now, just so you know. James Bruning's writing an offer.
Oh, great. Excellent.
Yeah. So
I like how
he's asking me for a pre-approval. So
Cool.
I told him I was doing a meeting with the new agents. He goes, I didn't get invited. I said, you're not new anymore.
I know he's not new. He's been licensed over a year now.
I know. He's like, I'm still learning. I said, I'll send you the link. And he's like, no, I got showings. I'm like, okay, there you go. He's great.
All right, yeah. Well, cool. I appreciate everyone's time today. Thank you so much for coming. And thanks so much, Bill. I appreciate it.
My pleasure. See you guys. Take care.
Thanks, Bill.
Bye-bye.
A good one.
Bye.
Bye.
Bye.